What's going on, guys? Welcome back. This Institutional here, and we are back with another video. So for this one, we're going to start just a little simple, and we're going to go over again. There's videos that I used to do almost every week that were called building data. So I want to show you guys a little bit of understanding structure from a whole perspective, right? Like what is H4, what is H1, what is daily, how we can combine these things, combine into one, and how we can expect price to do certain things when price is not doing it from other time frames, right? So the way that you have to look at structure, or the way that you have to look at how price moves, is look at it from a bigger whole, right? So if you think about it like this circle that we're in, right? Let's think of this, or let's put it a little bit more easier to understand, right? Let's think that price is sitting inside this box right here. All right, so this nice and orange box, this is where price is. And we're gonna go from an H4 perspective, right? So from an H4 perspective, we're gonna have this big impulse like this, right? So that big impulse, let me actually refresh this because it looks like the it's messed up with the drawing. So let's refresh this real quick. And I'll show you guys what I'm talking about here. So let's go back to EURUSD. Let's go back to what we were drawing here. Is it fixed? That's fixed now. All right, so let's think about it again that we are in this big orange box, right? And then we have a big H4 push up higher like this, and then price is just going like this, right? So we have to understand that in these components here, there's going to be smaller time frames. That means that we don't have to expect price to come back down here to retest and then go higher. If price is respecting M1 levels here, M1 is going to continue going higher and it will never have a retracement down low. So how can I explain this to you a little bit better? If we're looking for breaks of structure in the box, right, and we have this H4 low point to this H4 high point, we need to make sure that every time frame starts being broken. So what does that mean? It means that we need to break M1 first, then we need to break M5 first, then we need to start breaking M15 and then H1, and then potentially we can come back down to take this H4 level. And then from there, it's going to be an extreme where price can potentially start pushing up higher, right? But the problem that people don't understand is that these levels don't always have to get triggered. These H4 levels don't always have to get triggered. What you need to understand is that majority of the time what actually happen is we'll continue respecting either M15s, M5s, or M1s, because guess what's going to happen? There's going to be some type of double top here. Where people are going to be expecting this to get rejected, and smaller timers are going to continue going. So a good example is how we can apply this now into one. It's going to be EURUSD and S&P, right? So we're going to go over what happened today and the way that you should be looking at the market from a different angle, right? So taking a look at EURUSD, right? And if we're looking at the way that structure is being held here, well, what are we actually looking for? If you look at price dropped down here, and we have this low point that led to this high point, right? And then it looks like from a structural basis, here we didn't have any bearish candles, so we didn't really create a higher low point. But here I see that we made a nice reduction, and then we made a nice order block here. So this can be considered our bear candle or H4 swing. This is what I would be considering my H4 swing from now this high point or this low point right here all the way up to this high point. Now the problem is, do I need price to come back up all the way down here? I don't need that. Why? Because I see that here is going to be a double top. So here there might be a level where traders are expecting this to drop down lower, right? And as SPC traders, we always want to do the opposite. So now we can start dropping in smaller time frames. So looking at H1 here, right? Let's look at H1. What do we see in H1? H1 again, we have structure. We have this low point to this high point. Does that mean that I need price to drop all the way down here? Well, I don't, right? Because again, we're still overshooting. We're still bullish, and price is still showing us that it's in bullish PA. So as long as time frames are being respected, I don't need to look at higher times. I can continue going on down smaller times. So let's look at M15. Let's look at M15 here. M15, where is my last one low point? It's from this low point to this high point. But is it giving me any types of rejections? Now I'm going to put you guys the time frames that we're trading. So we'll start from 9 all the way to 12, right? And what would be my target for this day? Well, it will obviously be the high. And we can see that there is no structure being broken, so I can still capitalize on this within a smaller time frame perspective, right? Because as long as we're not breaking any time frame, I can still try to capitalize on the long. So let's look at M5 now. M5 here, we had the market open. So 9 a.m. we opened up, and then we had to drop down and we pushed up higher. And this right here is our first confirmation that price is not breaking anything. So I don't need to go up any time frame and I don't need to expect anything. I could just capitalize from this rally gap right here and understand that from here, price might want to go higher. But again, the reason that what I'm trying to get you guys to understand is that if we're not breaking smaller time frames, why are we going for the short here? There's no reason for us to go to the short if we're still respecting on 5, right? So we made a higher low point, we can start making it off. Higher low point, higher high. And then we had a higher low point here that got respected, but let's hit higher high. And what do we see here? Again, we have yet another fair value gap. So this was the trade that I actually took today, right? And again, pretty simple fair value gap. I don't need to drop down to M4, M3, M2, M1. I don't need to because I'm looking at structure from M5 and I can see that M5 is still not being broken. Now, let's say that M5 starts being broken, or let's say that I start seeing something that's showing me that price wants to reject down lower, then I will drop down to 15. But like, let's say what I'm looking for here is just structure going back up to its double top, because a lot of traders are going to be looking for that short, and because we have that fair value gap here, and again, structure is not being broken from any angle. So this was a nice little 2-to-1 that we took. Stop loss right below this OB. You have the fair value gap entry, price drop down, and then before market goes to that PM session, we hit TP for a nice little 2-to-1, right? And again, do we need to be expecting price to start shifting? And you can see that now, what are we getting here? So if we're looking at M5 angle, we have this higher low point right here to this higher high. And now it looks like we're breaking structure, right? So now I can start looking at M15. M15, what do we have here? I see that my last lower low point, or my last higher low point, is really down here. And I also have a nice little FEG to guide me from. So now what I'm expecting to see is, can price drop down here? And if we drop down here, we're going to continue going higher. Now, let's say that we break this, right? If we break this level, then I'm looking for the H1. And if we break the H1, then I'm looking for the H4. And that's how I can start going with the counter trend. But as long as we're not breaking any type of structure, then I'm not going for it, right? If we're not breaking M5s, so we're not breaking M1s, if structure is still being respected from every single that I'm looking at, every single angle that I'm looking at, then why would I be looking for the short, right? It makes no sense. But now let's guide this example backwards, right? Let's go now to S&P and understand what happened here. So look at S&P from, again, a bigger time frame angle. If we look at H4, we can see that we are obviously, overbought. We have this higher low point here that led to this higher high, right? So today's session, if, does it mean that for us to go for longs, we need to expect this to come back down here? No, we don't need to. But we need to make sure that every time frame is being respected, right? That's the main principle. We need to make sure that every time it's being respected, and if it's not, then we can go down to a bigger time frame to aim for that, but still continue on with the trend. So if we go down now to H1, well, what can we see here? We can see that in H1 here, what did price actually do? It went down and I went up higher. Now, for this to happen, that means that there was something here that started breaking out of M15, M5, small time structures, that it's guiding us that potentially this could be a shifting point, because this is obviously the H4 level, right? This leg right here, this is H4 right here. So let's mark that off for you guys. H4, sorry. And up here, we also have that H4, right? And down here, we have what? We have H1, right? So for price to come down here, that means that there was structure being broken. So let's drop down to M15 and look at what happened today. So now if we drop down to M15, what do we see happen here? We see that we have this higher low point that is higher high. And our first confirmation context, well, to begin with, it was this fair value gap that was bullish, it got broken. So once this pocket starts showing us, we have to understand that now this structure level, or this M15 level, is most likely not going to hold. Why? Because it's already breaking the significant components that build out of this M15 block. So once this M15 higher low point to this higher switch being broken, this right here, we understand this is not going to hold, and most likely we're going to come back down to take this H1 level, because we're breaking out of this. This is the significant portion that we needed to hold for price to continue. We wanted to continue in this M15 level. On top of that, if you guys understand a little bit more of SMC concepts, right, and we look at structure from a bigger whole or bigger grain, right, what happened? What happened actually happened this morning, right? If we look at structure here in the morning, we had SMT. So if you look at US 30, you can see how we actually had a big sweep of liquidity right there, right? And then for S&P, we didn't have that. So that means that price is weaker here, doesn't want to continue going higher. So we can potentially have an entry capitalizing here, right? So if you look at structure here, again, what do we get? You can see our price here, we dropped down lower, lower high point, lower low, order block being formed right on top of that formation. And you could have taken a trade. Now, again, expecting price to break out of this FT level because what? Because price is showing you that it does not want to continue going higher. What does it not want to continue going higher? Because it's breaking out of significant structures, significant components that are making it at this level, we can aim for that short, right? So now, once price drops down to this, or once, see now that we're down at this H1, we have to understand that, again, we're still bullish. So this is the whole part of building data. Understanding that every time frame combines into one. But the reason that these time frames start getting hit is because we're breaking out of smaller time frames. So now what we're expecting here, or what would I be expecting if price wants to go up higher? Well, first of all, I need to see a structure or a break out of this M5 levels, because we have to understand that this is what's making this, right? This is the components that I'm building myself now from. We have this M5 structure. I need to see this being broken. And if this gets broken, this is already showing me confirmations that this big H1 level or structure is going to be significant for price to then continue going higher. And now I can capitalize on the longs when I was capitalizing on the shorts, understanding that we were breaking out of smaller time structure, going for the bigger time structure. Now, let's say that price continues dropping, right? And we break out of this last H1 level. Now I understand that I have a whole grain to fill. So this entire range, it's most likely going to fill because we have now H4 structure down here that wants to get mitigated. But if it doesn't, then I understand that this is all I'm looking for, right? And that's a little bit about education that I want to do with you guys today. Show you guys a little bit more about structure and substructure, and then combining it all into one. When these levels start going to hit, and when they don't start going to hit, and why they get hit, why they don't. How you can capitalize on double tops a bit more in depth than that. Entries, closes, all of these things start. It's a whole puzzle, but little by little you start solving it. So I hope you guys got a little bit from this video. I will see you guys in the next one. You guys know how it goes. Don't overtrade, don't over leverage. Safe trading. Peace.